The US stock market closed last week with the sharp losses of the key indexes. The Dow Jones, the S&P 500 and the Nasdaq closed with the weekly losses of 1% on average. Notably, there was no reason for such a steep fall on Friday, except the fact that the US stock market had been extending a non-stop rally without a large correction. Amid the steady economic recovery, US stocks are trading at uncomfortably inflated levels. So, investors would like to see a considerable decline for new purchases. Meanwhile, global investment banks such as Morgan Stanley, Citigroup, Deutsche Bank and the Bank of America warned their clients that the US stock market would be risky for investment this autumn due to elevated levels. The situation is turning curious. Let's discuss it in detail. The S&P 500 has locked 54 intraday records high. The index has gained almost 20% for 8.5 months of 2021. Nevertheless, it closed with a weekly 1.5% fall on Friday. Meanwhile, the index is trading at near 4,460 points with the expected price range of 4,420 to 4,480. Under such market conditions, investors are monitoring a 50-day moving average that matches 4,415. That's roughly 1% lower than their current level. Experts reckon that institutional investors are likely to resume buying at 4,415. All in all, there is a 50-50 chance that the market could either reverse upwards and reach fresh highs or develop a steeper drop. The US dollar index hit 92.70, a two-week high versus a basket of major currencies. It's projected to trade sideways within the borders of 92.40 to 93 until the meeting of the Fed Reserve, which is widely expected to revise the ongoing monetary policy. The momentous event for the euro will be the federal election in Germany scheduled for September 26. The USD CAD pair rose to 1.2670. The expected corridor for the pair is between 1.26 and 1.2720. Today, apart from oil prices and the greenback strength, the loonie has been affected by a report on Canada's employment released on Friday. Canada's labor market added 68,000 jobs in August. So, the employment growth was much weaker than a month ago when the economy created 83,000 jobs. The crypto market has not generated any signals yet for a further trend. After Bitcoin tumbled on September 7, it has been trapped in a narrow range of around $46,000 for a few days. Experts believe that Bitcoin will hardly slump lower. A steady bearish trend will not benefit any of the sides because investors have already bought the cryptocurrency at the price following the slump last week. So, the digital token is likely to trade inside the current range of $45,000 to $46,000. The cryptocurrency could gain bullish momentum later on. To sum up, Wall Street is ready for a downward correction in anticipation of the Fed's policy meeting, which is due on September 22. Perhaps the regulator will announce that it will begin tapering monetary stimulus by the year end, taking into account inflation as a key criterion. On Tuesday, the market will get to know the data of major importance, the US CPI for August. Will the report confirm the Fed's assumption that the inflation spike is temporary? We will find out tomorrow. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.